Hi, everyone. My name is Bob Jablonsky. I'm a certified tax resolution specialist. And at my firm, Jablonsky and Associates, we help taxpayers who have tax problems. Today, we are going to talk about something I've seen more happening in our current tax environment, and that is audits and different types of enforcement activities. If you can remember, if you probably remember, it's been in the news for the last 2 years. The Congress allotted an additional $80 billion to the IRS to, one, modernize the IRS and provide better customer service, but two, for additional enforcement activities. What's that mean? Audits, making sure tax returns are completed completely accurately, as well as collection activities, making sure the government gets the money that it's due to it from taxpayers. And with this, the IRS has been hiring new employees. We haven't really seen the effect of it until recently, but now we're seeing that the IRS has both hired and trained those employees, and we are seeing those enforcement activities increasing. We're more contact from the IRS with audits and other activities that are used to raise money. The one thing I would mention is don't be afraid of taking legal deductions just because there may be an increased chance of scrutiny. If it's a legal deduction and you're due to it, and you're due that deduction, and you have some adequate documentation, you should take the deduction because we are not required to pay any more in taxes than we're legally required to based on the tax law. So just kind of keep that in mind as we go through this. But we are going to talk about common reasons why taxpayers are audited by the IRS. The first one is unreported income. As you may or may not know, the IRS gets a whole lot of information from third parties, W-2s, 1099s, and so on. And they do computer matching in order to show what is, what may be missing from the taxpayer's tax return that could be for the benefit of the IRS. The notice they'll receive is called a CP 2000. It's not technically considered an audit, but the reality is it's a computer matching audit. So beware of that. Unreported income, number one reason. Math errors and inconsistencies across the tax return or years may create an audit. Schedule C deductions, business deductions. Small business owners who file Schedule C are more likely than the average taxpayer to be audited. When they're audited, there's a lot of expenses that go on a tax return on a Schedule C that are kind of on the honor system. So the IRS finds that they get a lot more bang for their buck when they audit these Schedule Cs. That may be because just their errors, or that may be because the business owner can't find the correct documentation to satisfy the audit, but that's the reality of it. If a small business has recurring business losses, they're more susceptible. They're going to be looked at a certain point in time because the IRS has determined, is this actually a business or is it a hobby that should have losses restricted to hobby loss rules? So be aware of that. Have a cash-based business, more potential for abuse there. So the audit is going to up their number of audits. So you have a business with cash where you collect a lot of cash, you should have a higher expectation of an audit. Other deductions or credits where there's excess deductions. I'll give you an example. Let's say you do some gambling and you have substantial gambling losses. That might be an area where they would look at as being, is this excessive? Why is this real? Virtual currency and digital asset transactions. The IRS fears there's abuse. The reporting is getting much better from third parties. And the IRS has put a lot of resources into scrutinizing these virtual currency transactions. So make sure you get those reported properly if you engage in those activities. High earners, kind of unfair, right? But the reality is that the higher the earner you are, the more likely you are to be audited overall. And the IRS has different methodologies where you see different amounts being used for what is a high earner. See, $400,000 is out there a lot. I've seen it as low as $100,000. So high earners aren't always what we would consider to be high earners. Any large transactions that flow through your return may more likely to trigger an audit. Might be something the IRS wants to look at. And then finally, you've been previously audited. You didn't have a good outcome. The IRS find a lot of adjustments and changes. Well, they are more likely to continue looking at your tax return until they see you get those fixed. So make sure if you do go through an audit, you take it seriously and you get the best outcome possible. So what are some suggestions for navigating an audit? Well, first of all, keep good documentation. That's going to protect you from a lot. And don't wait until you get that audit notice to start putting together that documentation. It's often too late. You've thrown it away. You can't find it. And you're not going to end up with a good situation. Do it today. Do it when you incur the expense or whatever the transaction that's going to be a deduction. Make sure you do it, or at least by the time you file that tax return and you're putting it on it. Earlier you do it, the more likely you're going to have good documentation. And if you're a small business owner, keep a good set of books. Those numbers that you estimate, they're not good when it comes to an audit. They're of no use. You need to have some good documentation, and it all starts with a good set of books to identify the numbers correctly. If you get audited, remember the 3 P's that you need to have for each of those deductions: a purchase document, an invoice or something, a statement, something similar that shows what you purchased, a payment document, where'd you pay it from, proof of payment, and then you're going to need to know that it has a business purpose and be able to show that that transaction has a business purpose. If you get a notice, you get something from the IRS, respond timely and fully to IRS notices. You ignore them, bad things are going to happen. And remember, some audits, especially some audits, can be complex, or it might just not be up your alley. If you need help, get professional help if you need it. So hope you find this interesting. If you did, give us a call, 972-821-1991, or contact us. You can go to my website and you can schedule online. Glad to help you if we can. Hopefully you find this helpful today, and I look forward to giving you more advice. Okay, have a great day.